Welcome to this episode of The Business Masters, where we speak to the leaders driving change and shaping the future of Indian business. These are visionaries who are not just driving growth, but are also building lasting legacies through their innovative ideas. And today we're honored to have with us Mr. DP Singh. He is the Deputy Managing Director and Joint CEO of SBI Mutual Fund, one of India's largest and most trusted mutual fund houses. With over 30 years of experience in the financial sector, Mr. Singh has been at the forefront of making mutual funds accessible to millions of investors across the country. And in this episode, we'll delve into his leadership journey, the growth of the mutual fund industry, and the trends shaping the future of investments in India. Mr. Singh, thank you so much for joining us.
Thank you. It's a pleasure to be here.
Sir, let's dive right in. Of course, you've been with SBI Mutual Fund for many years. Can you tell us about how the company culture has evolved over the years?
The company culture has definitely evolved when we started our journey. This company is 37 years old, but actually we went into running and mode maybe say 15 years ago. Earlier we were a very small player. Since then the company's culture, the company's ethos have evolved in a big way. And we are proud to be having the prodigy of State Bank of India, the most trusted name in the country. So that has taken away. But what we in SBI Mutual Fund has done, that we have taken the mutual fund to every nook and corner of the country, with 23,000 of branches of our parent, with the very strong distribution network along the all across the country. We have been successful in taking the mutual funds to every door. So that gives a lot of solace to us.
Right. And so, in fact, I was going to come to this SBI Mutual Fund. It is consistently focused on the retail sector. What's been your strategy when it comes to making mutual funds accessible to first-time investors across India, especially, let's say, non-metro cities?
Yeah, that has been our focus area from very beginning. And why so? Because of, again, I say the trust which we have in the smaller towns. Because when we are talking about any financial product, the person who is investing or putting money in that product, he always gets a lot of confidence that there's somebody next door whose door I can knock in case of need. So that gives us a upper hand that the people know that there's a SBI branch all across the country. There's a distributor who is dealing with SBI. There's another bank also who is also dealing with the SBI name. So that gives us heads up, and that has actually given a lot of confidence to the investing fraternity. So that has been a big boost for us.
Now, of course, sir, you're an expert in this field, but mutual funds are often seen as complex by many people. What drives your passion for making investments more understandable for the common investor?
That's where we work the most, making the complex things simple. Actually, things are simple, people make it complex to add, so that it should look like a value-added kind of thing, that I'm adding a lot of value. But the value which we add is only one, that we know our responsibility, that we are investing in the market. It could be an equity market, it could be fixed income market, it could be commodities like gold and silver. We know our responsibility, that we are investing on behalf of that small investor who doesn't know the nitty-gritties of this business, and we as their trusted partners have to take care of that we do all the right things, and we take the decision on his part. For that he is paying fee which we charge. He's paying, the investor is paying fee for that only, and we walk the talk. We don't look at the business that just to get more numbers. We don't do, but we want to be true to the title, true to the expectation. That has been an ethos and value system of SBI Mutual Fund.
So walk the talk and quality over quantity.
Yes,
all right,
yes.
sir. Now, as a leader, how do you manage and balance responsibilities of managing such a large institution while also ensuring that individual investors still feel connected and informed?
So that the communication is the key. We need to communicate with the investor, with the internal team, with the external stakeholders, and media is a very big partner. People like you who take the message along, because it's a digital world now. Digitally, we can reach out to many, many more than we could have ever done before. So today, virtually, we can reach out to anybody, whosoever is interested. He or she can get the communication, whatever is there.
I'm glad that we've been able to play a role in this as well, sir. That being said, what's been most rewarding? What's been the most rewarding part of your association with SBI Mutual Fund? Do you have a moment where you felt particularly proud of the company's impact?
Yeah, the most satisfying event is that within public sector banks, if you look at the overall banking industry in the country, it can be bucketed into three parts. One is private sector and foreign banks, the other is public sector banks, and the third bucket is definitely State Bank of India. State Bank of India is today the largest distributor of mutual fund products. And as the things have evolved, the mutual funds are the need for anybody who is having the investable surplus. He wants savings, he wants investments. It's a bucket both. For banking point of view, the message of giving the customer of the bank the complete bouquet of products with the mutual fund product with the SBI name has been the most successful, most solace-giving experience.
How has the mutual fund industry changed since you began your career? I'm sure you've seen many cycles. What do you see has been the biggest challenge moving forward?
The biggest challenge is the financial literacy. Financial literacy is something which is extremely important, and the level of financial literacy is also changing very fast. With the investors becoming more and more evolved. Now we have on the one side, we have very, very evolved investors, a big number of evolved investors. And on the other side, we have a big number of people who are absolutely unaware about this part, financially, they are not aware. With 1.4, 1.5 billion kind of population and the increasing per capita income, the need of reaching out to so many people is a challenge. And the communication for the evolved HNIs, ultra HNIs is going to be totally different from the communication which is going to be for the small-time investor or the first-time investors. And we are concentrating on the second part much more than the first part. Because on the first part, there are so many people who are talking about that. But reaching out to the small investor, reaching out to the retail investor, telling them what is decoding the risk factors. Like today, we always say that mutual funds are subject to market risk. But nobody can understand what does it mean, what is the degree of risk in one particular thing. Decoding that, reaching out to those people and telling them what risk, good risk and bad risk, what quantity of risk is good for them and what quantity is not good for them. That is something which we are working on, and that is an ongoing journey.
All right, and in a world filled with financial products, how do you think mutual funds will continue to evolve in the next decade or so?
Definitely it will. It is already happening. When I look at in the current financial year itself, the mutual fund industry has grown by almost 15%. 15% in half year. That's a big growth number. Of course, this 15% includes mark-to-market, which has come through the market movement also. But if I take it out also, the growth is very good. More and more number of people are joining the bandwagon of mutual fund investments. But only the responsibility on mutual fund industry or the manufacturer is to push right kind of products at this level. When the markets have run up, the valuations are costly, and how to push the hybrid funds or how to push the more riskier product to the people who are knowing about it, and less riskier product to the people who are joining the bandwagon now, so that they don't have bad experience.
All right, so let's also talk about your leadership journey and vision. You've held various leadership positions. How has your approach to leadership changed over the years, and what key qualities do you think are essential for leading a company like SBI Mutual Fund?
No, I tell you, see, ours is a unique system. We have one side, we have a parent which is State Bank of India, and they are so sportive that they know, the leadership team there, they understand the value of investments along with savings, and they have been very encouraging at every moment. On the other side, we have the most leading AMC of Europe, Amundi, which is number one AMC, and they are our joint venture partners. And the third is the team itself within mutual fund, which is, if you look at the vintage of the team, of the investment side or the marketing side, we are lucky to have the least attrition rate in our company.
Right.
So that is the culture which you initially talked. We have been able to create a culture of trust, create a culture of belongingness and a family culture, so that people are staying for a very, very long time. And in an industry where attrition is very rampant, people don't stay for more than 3-5 years. Today, if I talk about our investment team, the vintage is more than 12 to 15 years. That's the average. So if we take the people who have joined now or the people who have joined earlier, so this is the average. And same is in our other verticals. It could be operations, it could be compliance, it could be marketing and sales. But we are very blessed to have such a big legacy and vintage which we have been able to create.
All right. And so how do you ensure that SBI Mutual Fund, it stays at the forefront of innovation, especially with the rise of digital platforms, technology?
Yeah, we have a pulse to the investors down the line. We are actually servicing the most evolved the clients in the country, as well as the lowest strata of the society. We are fully committed to get more and more number of Indians into the investment journey, because when we are saying the India is growing, it's a multi-decadal stage. Unless until our fellow citizens are benefited with those growth trajectory which is happening for the country, I think we'll be failing in our duty. So that's what we're looking at. Reaching out, innovating the products, for example, and not only on the product side, we have to look at the taxation policies of the country, what is the direction, what government wants, and innovating the products which are most tax efficient for the investors, which are most liquid for the investors, so that people don't have to face any problem in dealing with the mutual fund business. That's something, that confidence, that platform, that tools, that those apps, those digital tools to distributors as well as the investors is something which is an ongoing journey and evolving journey. So innovation is not only on the product innovation, but on the servicing side also, on the giving a best experience to the person who is investing money in the market. So we are working on everything simultaneously.
All right. So, and what's one principle of leadership that you believe is universally true, regardless of the industry?
So lead by example. You have to work hard to let your team work hard. So that's something which is very important, because in our industry, 2-3 principles which nobody is galti se bhi galti nahi honi chahiye. That is one thing, because we are having the fiduciary responsibility towards the investors. Second, we have to see that the penetration is at the highest level. 3, be part of the industry in every respect. You should try to lead wherever it is, and whosoever is doing something innovative, respect that, and if you can replicate that. Don't hesitate. We should not be arrogant. No, we will have our own innovation. We will not do something which others are doing. If somebody else is doing a good job, we respect that, we compliment that, and try to replicate, so that we reach out to more and more number of people.
All right, so look and learn. Sir, looking at the future of financial services, what do you think will be the biggest disruption in the next 5 years or so?
Biggest disruption in the financial market will be honestly speaking, as far as our country is concerned, we are in a very good growth trajectory, which is visible for next 1 or 2 decades. So I don't think from that point of view there will be any disruption. But geopolitical things are something which could be disruptive for the overall financial markets, and we cannot be different from, though we are saying we are decoupled to an extent, but we are coupled to a major extent. So if something happens outside India, that will definitely impact us. So we have seen that, but we are insulated to a greater extent. We are insulated because of the retail participation in our markets, especially the capital markets. Banking is in a very, very good shape. Banking sector is in a very good shape. and so is our parent is a very, very strong position. If we talk about the mutual fund industry, the industry is in good shape. But only thing is, again I say, we have to educate not only the investors but the intermediaries also, that they keep on pushing along with us the products which are suitable to the investors. Suitability for the investor is the most important thing. Because mutual funds are becoming more or less a quasi-banking product.
All right.
Yeah.
Well, Mr. Singh, let's switch gears now. What's one thing outside of your career that you're incredibly proud of?
I'm definitely proud of the growth which we have been able to take in we were number 6 for a long period in the industry, and we became number 1. And the leaders who came from State Bank of India, the DMDs of State Bank of India become the MD and CEO of the company. They have been coming with a different kind of so the thought process is never mundane. We keep on reinventing ourselves. Some people say that this is a challenge, but I say this is a blessing, because those people who come with the very varied experience, they come with fresh ideas, and we always adopt some ideas from their along with whatever we have to do with the industry. So that kind of freshness which comes from that kind of structure in our company. And second, our Amundi, which is a joint venture partner, we are proud to say that we are having a very active joint venture. Unless the other joint ventures where they are not so-called joint venture partners, but they are investors only. They have just bought some capital. So Deputy CEO comes from there. There are other people are on deputation with us. We go to Paris. We understand. We have become a absolutely global company in a real sense.
All right.
Till now, we have been concentrating more on reaching a level in the domestic market, which we have, and we want to grow from here on domestically. But we have the now global aspirations, and our joint venture with the Amundi is coming very, very handy in that.
All right. Well, Mr. Singh, if you had to give your younger self one piece of advice, what would that be?
One, stay focused, stay and don't jump the gun every now and then, and don't think that by doing so, by jumping you will grow. You can grow within the industry. You in any company, remain focused, remain true to the title, don't try to have any shortcuts. Shortcuts will never work. So it may give you some solace immediately, but eventually it doesn't pay. So you be focused and be proud of whatever you're doing.
All right. And if you could give young investors one rule to follow, what would that be and why?
Start quickly, start early, and the moment your investment journey should start before you even start getting your salaries or start getting your income.
All right.
It should start from the pocket money time.
Okay.
So that's the way I would like youngsters to start their journey as quickly, because the power of compounding will work only if you start early. That's something we have seen.
So understand the power of compounding. Now the financial world, of course, you know this better than most of us, is fast-paced. What mindset or skill should young professionals develop early on to succeed in such an environment?
They should actually have the expectation should be muted. I won't say it should be less. You should try to have higher expectation. But in investment journey, the past experiences are not any definition of any confirmation that future will be like same. Because markets always factor the future much in advance. So if somebody has got 30-40% in the last 2 years, one should not expect that next years are going to be like that.
All right.
It could be higher than the policy rate, 5, 6, 7% higher than the policy rates in the country. That should be good enough, and we are lucky that our currency is very, very stable now, and likely to remain stable with the kind of foreign exchange reserves we have, with the kind of exports growing, with the so we should be very proud of that. India is the destination to be, and don't look here and there. Be invested, start early, and remain focused. Don't look at the short term.
Right, sir. And on that note, I want to ask you, what's the biggest mistake that young investors tend to make, and how can they perhaps avoid it?
Yeah, see, their longevity in investment is very low. Generally, sometimes when the markets are like for say last 5 years, they have seen only one side of the market. They have not seen. I mean, anybody who has started his journey has seen only one side. But there are always markets have always remained volatile. It's not a straight line. See returns ever. Don't get worried if you get some negative returns temporarily. Remain focused. Don't. It should be goal-based investing. It should be a short-term goal also. It should be a medium-term goal also. The way we used to have different way of savings earlier. There's one for my education, one for my capital building, one for my retirement. So there should be different buckets of investing. And don't say that youngsters should start thinking about retirement immediately, but for his growth. Now, it's an era of entrepreneurship, right? If I'm joining some job, but my aspiration is to be an entrepreneur, then I should create some capital. Until I have some capital to keep it in the skin in the game for any venture, I will not be able to get any help. So idea is the most powerful thing, but the capital is also another most powerful thing.
Right.
Create capital for yourself, and the people who are already in the mid 30s or early 40s, they must start creating capital for their kids and this thing. And see, today there's no age for entrepreneurship. Even we have seen people in the 60s also having a startup.
Right.
So creation of capital is a must.
All right. And as someone who's seen multiple market cycles, how important is patience? I mean, you've touched on this when it comes to investing for the long term.
No, it's extremely important. See, we have seen there are examples. People started investing for, say, children education, but by the time that stage came when they have to send their kids for education, their financial situation built up so much they didn't have to dig into that fund which they created. So that remained invested and continued to remain invested. There's another thing. 10 years ago, if I go back into the memory lane, and one of the most important thing which we used to talk about, wedding of kids, especially the wedding of daughter or this thing, so that is no more relevant. Today's kids, today's youngsters, they're spending on their own weddings. The parents don't have to take it. So that investment has been created as a capital for them. So that is working as a capital. May not be for education, may not be for wedding, may not be for house, because over the period of time, see, GDP of the country is growing, people's financial health is growing. So what we used to think 20 years ago as the biggest goal 20 years down the line, that has become a cakewalk, and that investments are working. So today also, remain focused for long term. This will, because longevity is growing today, biggest goal for anybody is the retirement.
All right.
Because retirement should be the goal, because longevity, with the medical science progressing, we'll have, earlier we used to have 65, 70 max. Today it's average 80, 85, 90 is there. So you have much more longer period to stay on the corpus which we have created. Rather than having short term, the retirement goal is the most important goal for today.
Right, Mr. Singh, now just to expand on that, what's one lesson about financial independence that you wish more young people would understand?
Yeah, one thing is don't get into the. You have to differentiate between appreciating assets and depreciating assets. Most youngsters earlier used to spend their earnings, their savings or investments into creating an asset which is depreciating. But today they have understood they need to remain invested in an asset which is appreciating. It could be, when white goods or gadgets are out of question, those are become very, very small things, but they need to remain invested. Earlier, our parents always used to tell कि तेरा अपना एक मकान होना चाहिए. Today's youngsters, they think, no, there's so much supply and I can always rent out. Why should I? Because the economic sense doesn't tell me that I should. So investment is the key. And going forward, the way India is progressing, I think the global investments, in addition to investment in Indian companies is going to be the, today we are having the hybrids of debt and equity. Tomorrow we'll be having hybrids of Indian stocks and European stocks, Indian stocks and US stocks, Indian stocks and some other developing countries' stocks. And not fixed income, not only of India but outside India. Because the way we are moving towards, eventually we'll have to get into capital account convertibility. So it will be, it's a cycle. What has happened in other developing countries, we are following that stage. Okay. So we'll be in that stage. Keep your eyes and ears open. See what is happening across the globe, not only in India. And I think the next 5 years, I think there will be many products which are investing into global themes as well.
All right, Mr. Singh, and that brings us to the end of this insightful conversation with Mr. DP Singh, the visionary leader behind SBI Mutual Fund's incredible growth. His expertise and commitment to investor education, it's undoubtedly set new benchmarks in the industry. We hope you enjoyed learning from his vast experience and leadership insights as much as we did. Thank you so much for joining us. We look forward to seeing you next time on WION's Business Masters.
There is a kahavat in Hindi, if I may use it, that whatever is there, you have to get. Whatever is there in your luck, you will get it. Now, whether you start running behind it or you start running away from it, see, you have to be clear what you want. Work towards it with dedication. You will get it, right?